Good afternoon, everybody. Uneducated Economist here. The taper talk, it's really starting to pick up steam now. And this taper talk is something that a lot of people said that the Federal Reserve was not going to do. That they would never back off on the quantitative easing, the money printer, go burr, the expansion of the balance sheet until they completely destroyed the dollar and it was no longer in existence. That's what a lot of people had said. Now, I have a tendency to disagree with that. I believe that not only will the Federal Reserve back off on the quantitative easing, I feel that they are also going to unwind their balance sheet. And in fact, I feel that the unwinding of the balance sheet has already started. Now, if you have followed my channel for any length of time, you have heard me talk about credible threats many times in the past. But if you're new to the channel, credible threats is the main tool of the Federal Reserve. Back in 2000, like 20 years ago, Bernake gave a speech where he talked about when the Federal Reserve hits the lower bound, like we are right now, where dropping of interest rates is no longer an effective tool for the Federal Reserve to use in order to stimulate the economy. He said that's okay. He said dropping of interest rates is not the only thing that they have available to stimulate the economy. See, typically dropping of interest rates around 5% would get people out there buying houses, cars, going on vacation, spending money into the economy. But at the lower bound of zero, dropping of interest rates is no longer an effective tool. They really just don't have anywhere to go. But he said, we can use our forward guidance, jawboning. I refer to it as credible threats because the way he described it was inside of a story. Now, if you can imagine a guy who invents a gold machine, and with this gold machine, he can produce as much gold at will with very little cost or energy. The moment that this information gets out to the markets that this guy has invented this machine, the price of gold would plummet, even before the guy produces a single ounce of gold. Even before he produces the machine, really. Just the credible threat alone that he can do it would be enough to change the market's perception. That is the main tool of the Federal Reserve, credible threats. And I think a really good example of a credible threat was last year when the Federal Reserve, in conjunction with the Treasury, had set up a special purpose vehicle to buy corporate debt. And now when they set up this special purpose vehicle to buy this corporate debt, people flipped out. They said, oh my gosh, the Federal Reserve is buying corporate debt. This is going to completely distort the entire markets. They're going to be able to pick and choose the winning corporations or losing corporations by being able to print up money and just hand it over to these corporations by buying their bonds. That's what a lot of people said. They were flipping out about it. Now, this special purpose vehicle, it's like an entity separated from the Federal Reserve. The Treasury, in conjunction with the Fed, had funded this special purpose vehicle with a lot of money. Like, I forget exactly what it was, $75 billion, $100 billion, something ungodly amount, right? And so when the markets took this perception, they were like, oh my gosh, the Federal Reserve is buying corporate debt and they got all this money to do it with. Well, let's front run the Fed. And so the investors out there tried to buy up the corporate debt before the Federal Reserve had a chance to go in there. So you think about it, if the Federal Reserve is printing up money and buying corporate debt, the price of corporate debt starts to go up, like the value of the bonds, the price that you can sell them for goes up and the interest rates go down. So this is a way of funding the corporations with a lower interest rate. If they can borrow money by selling these bonds for a higher price and the interest rates drop, they're able to get on all this cash at a lower rate. That's what the Federal Reserve was attempting to do by buying up these corporate bonds. But when the market took that perception that they were like, oh my gosh, the Federal Reserve is buying these things up, the prices are going to go through the roof, I'm in. And they ran out there and they started buying up all this corporate debt. The Federal Reserve, who bought some, establishing that credible threat, backed off and let the market take care of business all by itself. You see, the free market took care of business on the idea that the Federal Reserve was going to be in there manipulating the market, but they really didn't. They just said they were, and they did a little bit of it just to establish the credible threat. And it worked out great. So that is what I feel is that credible threat is what's going to take place when it comes to the taper talk. See, the Federal Reserve can say in 6 months, I look at my fingers, in 6 months we're going to we're going to start tapering. Well, as that time comes up, and even if they say in 6 months we're going to taper $10 billion, and we'll see what the next month, or something like that. Like, they don't give a real clear idea on what it is, just more of like it's definitely going to happen. All the market is going to start changing their perception. They're going to be like, okay, so now the Federal Reserve is moving into tapering, and people will start changing the way they behave, the way they invest, the way they perceive what's going to be coming in the future. They'll start changing everything they do, the way they invest, the way they spend money. Everything will change on the idea that the Federal Reserve is going to be tapering, especially if they do a little bit of tapering to establish that credible threat. But ultimately, the Federal Reserve can continue to quantitative ease, but the perception is that they are tapering. You see where I'm getting at here? This is what I feel the Federal Reserve is probably going to do going into the future for a while, is they're going to talk about all this tapering they're going to do. They're going to talk about unwinding of the balance sheet. They're going to talk a lot about it, but not a whole lot is going to actually happen, except for the credible threat. Like the special purpose vehicle that purchased all that corporate debt, they're going to sell that. I think they said that, yesterday, I think they put out an announcement saying that they're going to sell it off by the end of the year. Well, if you think about it like this, if the Federal Reserve last year was buying corporate debt, then this year they're selling corporate debt. If it's not, it was the special purpose vehicle, right? It wasn't the Federal Reserve. It was like, an entity away from the Federal Reserve. But people said back then it was the Federal Reserve buying this debt, buying these corporations' bonds. So if they were buying them, that means they went on their balance sheet. Not exactly, not the Fed's balance sheet because it's this entity, but that's ultimately what it was, right? It was the Fed buying it. Well, now they're selling it. So it's not on their balance sheet, it's at this entity, but it was really theirs. It was their asset, and they're selling it off. That's a form of unwinding. You see where I'm getting at here, guys? This stuff is starting to happen. The tapering is a credible threat, at least for the time being. They may taper a little bit. In fact, they may have to, just so that the money market funds stop getting as screwed up as they are. We did a little bit of a video on that, but money market funds are feeling some serious pain right now on account of how low the interest rates are and the fact that the Treasury is not issuing out as much debt as they're drawing down on the general Treasury account. So that's a whole other video out there, but pretty much the Treasury is sitting on a bunch of cash, and so they don't have to issue out as much short-term Treasury notes, and that is being very difficult on the money market funds who like to buy those Treasuries in order to, have a place to put their cash. And this is where the problem is that there's too much cash now sloshing around in the system. The Federal Reserve is having to use their repo facility, using the reverse repo, in order to take the cash off these balance sheets and fill them up with treasuries on an overnight basis. This is something that is like a emergency tool. It's like a pressure relief tool. It's not something that is meant to be there on a large scale, and it's huge right now. They're using this facility quite a bit. Now, a good way to end that is for the Federal Reserve to start pulling cash out of the system. Once they do that, that will really change the market's perception. So anyway, just wanted to talk about the taper talk. Uneducated Economist, you guys let me know.